The first quarter wrapping up today. CNBC has released results from surveying contributors, Wall Street equity strategists, CIOs, and portfolio managers for its Q2 quarterly stock report. And for more, let's bring in Dan Suzuki, Deputy Chief Investment Officer at Richard Bernstein. Dan, welcome. We're glad to have you, as always. Good to see you. The survey asked what they think, the people who responded, is the most crowded trade right now. 41% said Bitcoin, 32% said big tech, 21% said cyclicals, and 6% say small caps. What say you?
Well, Tyler, from my perspective, I think they have it a little bit backwards. I think if you just think about the sheer magnitude and breadth of the buying volume you've seen in tech and tech-related themes over the past decade, it really dwarfs, what you're seeing in Bitcoin from a size perspective. And I think that's really the reflection that, big tech, the way it's worded there, is really sits at the crossroads of the three big themes that dominate everybody's portfolios today, whether that's U.S. over international, large caps over small caps, tech over everything else. Those are the big themes, and that's what everybody owns. So when you consider that, the breadth of that ownership, and think about the average ownership of Bitcoin in an average person's portfolios, I mean, it's not even close. That's not to say that Bitcoin is not, more speculative and more sort of out of touch with reality, but I think that just from that question, the way the question's worded, to me, I think tech is a more crowded trade.
You can't get past the idea that there's much broader ownership and acceptance of technology, especially given all the money that's been made there over the past half decade or past several years. We also asked the question, over the next 12 months, would you rather buy JP Morgan, Goldman Sachs, PayPal, or Square? And there you see the results. Almost half say JP Morgan. 27% say Goldman, 24% say PayPal, and 0% say Square. That surprise you?
Maybe it's a little bit surprising to me, but I can't say that I disagree with the survey participants. I guess it's, the CNBC, viewership crowd is very astute. When I look at those things, as a macro firm, we're not really focused on, differentiating individual stocks. And, if you just think about, the top bank on that list, I mean, it's 96% correlated with the rest of the sector, right? So, our focus is on whether you want to own the sector or the industry or not. I think that the broad sector and the industry has a lot of good themes going for it. We focus on, profits, liquidity, sentiment, and valuation. I think that the profit story, I mean, it's got a lot of positive aspects from all angles. We have the recovery story, we have the support of the Fed, we have liquidity and rising interest rates. All of those things are going to be supportive. Yet, they trade at cheaper valuations than the bottom two. So I think that's kind of the way we think about it. Not to mention, the flood of liquidity that's going to drive a lot of capital markets activity as well.
Dan, obviously there's a lot going on in the markets. Stimulus obviously has been helpful. The Fed has been extremely supportive, but there are always risks. So as you look at the market from a broad perspective, you've said you're a macro firm. What should investors be most on guard for?
Courtney, I think the biggest risk out there, and I think this is well known, is that if you look at the market, clearly there's more and more signs of froth, and there's, the market's certainly not cheap here. So I think that, that's probably the biggest risk. But, valuation, as we all know, is a terrible timing indicator. I think the best thing that investors can do to sort of minimize that risk is the more expensive and the more frothy this market gets to emphasize avoiding those frothy and expensive parts of the market, the frothier it gets. So I think that still puts you into the same trade of buying the biggest beneficiaries of this recovery, who are going to see the biggest profits growth. Some of the stuff that Dom was referring to as the best winners, I think there's still a lot of runway there, and avoiding, these crowded, expensive parts of the market that, hit the survey, that first question of your survey.
Shepard Smith here. Thanks for watching CNBC on YouTube.